with infinite number of indicators, infinite number of trading strategies, 24/7 news channels, Discords, FinTweet, YouTube, paid free services surrounding us just by a click of a mouse. And still more than 90% of all traders will fail or quit for some reason in their first year of trading. In this video, we'll go in depth and try to figure out why. We'll try to provide some insights of why it happens. Hey there, Tmir from Fibonacci-Traders.com here with the weekly educational video. Please hit the like, subscribe, share with friends. Stay tuned for the rest of the video. Trading seems like a surefire to make money, right? Because we saw someone on TikTok, someone on Twitter, someone on YouTube that posts unrealistic profits, thousands and thousands of percentage of profits each and every day. We see Lambos, we see Rolexes, but the truth is it's tougher than it looks. The sad reality is that most newbie traders crash and burn. Let's see why. First, lack of education. Here's the deal. Trading is not for everyone. Trading takes skill. Trading is a skill and we all need to learn it. It's a marathon. It's not a sprint. We trade and we educate and we learn each and every day. We learn from each and every trade we take. Winning trades, losing trades. Many beginners jump into trading without a proper education or knowledge or understanding. We all think, including myself, 8 years ago, I thought, easy cash. Let's put some money, buy some calls, sell some puts, buy longs, sell shorts, easy money. But without the right knowledge of the market, technical analysis, risk management, and the psychology behind trading, we are walking on a dangerous path. Stop following others to tell you what to do. Become your own indicator. Treat trading like a business. Trading is not a hobby. It's a serious business that needs our full commitment. When we treat trading like a business, we switch our trading mind, our mental, from casual mindset to a professional one. Focus on the process. Once we focus on the process will bring us the profits. Just like any business, trading requires planning, strategy, and goals. Set clear strategy, set your own set of rules that works for you. What works for me not necessarily works for you, and what will work for you not necessarily will work for me. There is no right or wrong. There is only what works for each and every trader. So make a plan, manage your risk properly, and be consistent. We need to set up realistic expectations. For me, it took 2 years of learning, losing money in the stock market, buying courses, infinite number of courses, online, one-on-one, all the courses that you can think of, I went through them. It took me 2 years of learning, education, to set my own set of rules. And still, it took me another 1.5 or 2 years more to become profitable, consistent trader. And when I say consistent trader, it doesn't mean that every day I'm closing the computer on the green side. I have red weeks, I have red months. We all do. It all matters on the long term. In the end of the year, after 2 years, 3 years, are you consistent on your process? Once you will become consistent in your process, believe in yourself. Once you have a proper set of rules, of course, then you will see profits. Trading is not a get-rich-quick scheme. Many new traders, including myself 7 years ago, we thought In few weeks, we will swim in cash because we see stories all around us on YouTube, TikTok, Instagram, FinTweet, massive gains, and we all think that in few weeks we can do the same. If we want to become a lawyer, we go and learn 5-6 years. We want to become a doctor, we go and learn 7 years. We want to become a gymnastics. We want to become a professional basketball player. We put our life into it. But for some reason, there is a misconception that if we go into trading, day trading, swing trading, we will be swimming in money. Set realistic goals. Never risk more than you can afford. Treat trading like a business, because if you blow up your account, the next morning you're out of business. If your business is out of cash, you close the business. Same as trading. Trading, like any other business, have risks. It all comes down to risk management. How much money are we willing to risk on each and every trade? How much money are we willing to risk since we decide to become a trader? And start with swing trading. Don't listen to all those YouTube gurus, furus, FinTweet, call them whatever you want, that tells you start with day trading. No, start small. Start with the higher time frames. Start by swing trading. Because if you start with swing trading, less volatility, less risk. If you go in day trading, option trading, believe me, 2-3 months and you will blow up your account. If you cannot control $10,000 account, $20,000 account, you will not be able to control $100,000 account or $1 million account. The account size is irrelevant. What's relevant is your risk management. How much money are you willing to risk each and every week? When I go in a trade, something will happen. What will happen? No one knows. I have my risk management. What does it mean? How much money I'm willing to lose on each and every trade. In my state of mind, in my mental state of mind, I'm preparing to lose on each and every trade from now until I will stop being a trader. How much money I'm willing to lose? $50, $100, $1,000 on each and every trade. How much money am I willing to lose on each and every week, on each and every month? Because it doesn't matter if I have my stop loss amount at $50 on each and every trade, but I took 10 trades, lost them all, I'm down $500. Can I sleep with this loss? So also we need to set a daily limit, weekly limit, and a monthly limit, and then break it down to separate trades. Risk management is the stop loss. Where do I put my stop loss? Our stop loss is trader's best friend. Never push it away. Once you put on the stop loss, that's it. Don't play with it. Don't say, it's now going down, it's going the wrong way, I will move it a little bit. That's it. Once you do it, you're done. You lost. Stop loss also helps us to deal with emotions, because once we put on a trade, anything can happen, and we put on real money. It's our money. It's our saving money or any other money that we brought from home. And once we put on this money, our emotions take control. Our mind, reason mind, steps out. Our emotions take control. And once we don't have a risk management, a proper risk management, our emotions will take control, and then it's the time when we make mistakes that will cost us a lot of money. So don't neglect risk management. It's your best friend. Furthermore than what we've talked about until now, we have indicators. We we have all this free library of infinite indicators, and we have infinite number of trading strategy built on these indicators, and still more than 90% of us will fail or quit during our first year of trading. Why is that? We can all go learn to become a lawyer, a teacher, maybe a pilot. The success rate will be higher than 10%. In trading, the success rate is between 5 to 8%. Why is that? If we have all these indicators, and all these indicators truly works, so why we fail? Let's take Shopify for example. All the time we say that all indicators are lagging, and I say it without any doubt. All indicators are lagging. Any indicator that you will put on the chart cannot get its final value until the price gets its final value on the time frame that you're trading. If you're trading on the daily, each and every candle represents one day. So until the day ends, all those indicators, those EMAs, RSIs, MACDs, VWAPs, AVWAPs, Bollinger Bands, on all the rest of the indicators cannot get their final value, which means all indicators are lagging. All indicators follow the price. And furthermore, let's say you have one indicator, one EMA or something that you believe in. Now, let's take for example Shopify. Which EMA holds best Shopify as support or resistance? The 8, the 21, the 50, the 200, the 150? Which one? Let's say the 20 EMA, or in this case the 21. Now, let's take Shopify on the 5 minutes. If I want to day trade Shopify in the 5 minutes, which EMA holds best Shopify in the 5? The 50? The 150? The 200? Which one? Let's say I want to swing trade Apple. Which EMA holds best Apple on the daily chart? The 21, the 8, let's say the 21. Which now I want to day trade Apple on the 5 minute chart. Which one holds the best? The 50, the 21, the 8? What about Tesla? If I want to day trade Tesla on the 1 minute chart, which holds best? Support, resistance, which one? So it's not reasonable, it's unreasonable to try and figure out each and every stock on each and every time frame which indicator really supports or resistance for price. All indicators are lagging. Stop relying on indicator. Figure out a way to educate yourself to follow price. And if you cannot follow price and you cannot read candles, perfectly fine. Stop reading candles. Go back to basics. Go back to line chart. Now everyone can look left and see where price came from. I don't need any other indicator. The 100 EMA, the 200, the 20, the 5, the MACD, the RSI, the VWAP, Bollinger Bands, to tell me where price came from. I can look left. Price came from here, all the way to here, and bounce. Our problem as traders, where price might be heading next from here. And if you follow me on Twitter, and you are subscribed to this channel, you know that Fibonacci traders, we follow price, we use Fibonacci and trend lines, because Fibonacci levels and trend lines are the true support resistance for price action. And not only that, they are also the roadmap for future price action. let's take the SPY for example. If we clean the chart, remove all indicators, we can see clearly that we have here high, high, higher highs, and we have here higher lows. So for now, until proven otherwise, we can also take this one here. So until proven otherwise, we are in an uptrend channel. So what do I care if the EMA is going down, EMA is going up, if the RSI is overbought or oversold? Take Nvidia for example. Everyone is telling us for weeks that Nvidia is an overbought situation. Since March, from 220, now Nvidia almost 400. All we have to do is learn in-depth price action. You can use candlesticks, you can use line chart. Also for day trading, you can use line charts. Why? Because we can all look left. Let's take Microsoft for example. We can all look left and see where Microsoft came from on the 15-minute chart, but where Microsoft will be heading next. So we can take lines, highs and highs. From this high to this high, magic, all the way to here. Now let's see if Microsoft can bounce above, break up and above it, then where Microsoft might be heading next. We can take Fibonacci, swing low, swing high, reverse it. Next will be the 340, 346, and this is how we trade with high probability where price might be heading next. If we change the line chart to candles, why do I need green or red? Green is good, red is bad. Who said so? We can change it. Color bars based on previous close. Look at this. Look at here. From red to green, from red to green. I can change the colors. All white. Price action is lines. You can use line chart for day trading, for swing trading, for Bitcoin. Anything that you want. Bitcoin, 15 minutes. You want lines? You take the line, and here we are. From high to high, resistance, resistance, once again resistance. Got rejected. So if price will go all the way up over here, once again, I will know that with high probability, this red trend line will become a very tough resistance. And we can take the same line, go down. We have support for the higher lows. So on the 15-minute chart, as long as this channel holds, we are in an uptrend. If price will break up and above this line, we can take Fibonacci, swing low, swing high, and where it will go? 27,400. Look left. Where is 27,400? Here. Fibonacci gave me the future resistance because it was a resistance over here, resistance over here. Next will be the 27,600, resistance over here. This is all we have to know. Price action in depth, price action and the relationship with trend lines and Fibonacci. That's it. All other indicators are just lagging. Now, compare this one to the previous one. Put here candles. Now, is easier on the eye? Where are the supports? On the Bitcoin, on the 15-minute chart. Where is the next resistance? On the line chart, or even like this. Candles, but white. Clean the chart, clean the noise. This is all we have to do, and this is the basics of technical analysis, and this is all we have to know, the basics. So don't overcomplicate it with too many indicators, don't overcomplicate it with too many strategies, and treat trading like a proper business. Stop following others to tell you what to do, where to buy, where to sell, how much money to put, and everything, because if you follow blindly anyone on social media, paid or free services, you will blow up your account. Check the links in the description below for more educational resources. Fibonacci-Traders, we have the Fibonacci Academy playlist, free videos to help you become a better trader on the technical side, and most importantly, the psychology behind trading. Don't neglect the psychology behind trading. It's a crucial part in trading. Know your strength and know your weaknesses. By knowing your weaknesses on the mental side, then you will have a proper set of tools that works for you. You will have a proper risk management that works for you. So I hope you found this video helpful. If you did, please hit the like, subscribe, share with friends. Let me know in the comments below your thoughts, any feedback. Thank you very much for watching, and until the next video, do good things.